Today, I want to talk about how two brokers were bribed to manipulate stocks. Now, incredibly, the owner of this fund manipulating these stocks was actually imprisoned for 16 years as a result, after the fraud in his fund was uncovered and everything fell apart. Today, I want to explain why the exact same thing could be about to happen to Ken Griffin at Citadel Securities. So stay tuned and let's make some money. Now I'll dive straight in with the key information. So, a trader tweeted saying, "Wake up and watch this 50-second clip. Rhino advisors bribed two stockbrokers to manipulate the stock of Sedona." And there's actually an audio recording held by the DOJ of Refco participating in this synthetic short selling with an offshore hedge fund in the manipulation of Sedona.
At it, back between 2001 and 2003, Revco was directly involved in a naked short selling scandal associated with Sedona Corporation. The DOJ has arrest warrants out for two of the primary characters in that from Rhino Advisors, and they bribed two brokers to manipulate the stock of Sedona. And under audio recordings, they have those brokers working at Revco Securities. So the SEC has been looking at Revco Securities since 2001, and nobody can understand why, if the SEC has audio recordings and the DOJ has audio recordings of Revco participating in naked short selling for an offshore hedge fund in the manipulation of Sedona, why they don't know and why they aren't concerned about this particular bad debt.
Now, obviously this news recording is very old because the incident actually happened in 2001, but the owner of that fund was actually imprisoned back in 2005. So what exactly does this prove? Well, firstly, it proves that brokers are often bribed to manipulate stocks, and CEOs of companies are also bribed as well to let their companies fail. But it also proves that when things do fall apart, the owners of these funds are often imprisoned, just like what's happened here with Refco and with Bernie Madoff in the past. We can see here the owner of the Refco fund pled guilty to massive fraud back in 2005. As a result, he faces more than a century in jail and millions of dollars in fines in his May 20th sentence for conspiracy, securities fraud, wire fraud, bank fraud, money laundering, and making false statements to auditors and to the SEC. Refco was obviously this fund which dealt in securities, derivatives, and commodities, and the owner hid hundreds of millions of dollars in losses by reporting them as debt owed to his company instead of amounts that he owed elsewhere. So we can see here, not only did he plead guilty, not only was he charged, but he was actually charged with a 16-year prison sentence. So this really gives me confidence that when Citadel Securities ends up blowing up, Ken Griffin will indeed be caught and he will indeed face prison. And we can also see that FINRA is now actually being petitioned in the Supreme Court of New York for allowing stock spoofing, naked shorting, and market manipulation. It says the petitioner submits this petition for pre-action disclosure from the respondent, aka FINRA, so the petitioner can identify prospective defendants in an action to be commenced by the petitioner. And the petitioner anticipates bringing claims for damages for stock spoofing, naked shorting, market manipulation, and fraud. So this is a petition to compel disclosure from FINRA in the Supreme Court of New York. Now, I wanted to talk about the difference between Bed Bath & Beyond CEO and Adam Aron from AMC, because as I spoke about the other day, I believe that Adam Aron is on our side. Adam Aron has been trying to protect AMC and improve AMC as a company, and has even turned down bribes in the past, but it looks like the CEO of Bed Bath & Beyond might not be able to say the same thing. Not only was the CEO of Bed Bath & Beyond not trying to improve the company, generate more revenues and generate profits, she was actually doing the exact opposite, which could potentially suggest the CEO of Bed Bath & Beyond, similar to Refco, could have potentially been bribed to force the company into failure to improve the chance of synthetic shorting being successful. Obviously, we now know that Bed Bath & Beyond has declared bankruptcy and will shortly be delisted, so it seems like the shorts in this instance against Bed Bath & Beyond were successful, but they have not been successful against AMC. Guys, be sure to sign up to Moon, the sponsor of today's video, using the link in the description below. You can currently receive up to a whopping 15 free shares, entirely commission-free trading, free level 2 market data, and most importantly of all, Moomoo is very easy to use, it's very clear and simple, they've got tons of technical indicators and advanced charting tools. As Tendy Barron has tweeted, he said the Bed Bath & Beyond bankruptcy court documents show that the company actually received 2 unsolicited offers for the company. And Lazard also had talks with 100 different investors for them to solicit a transaction as well. Therefore, it's likely that Ryan Cohen and another CEO actually offered for Bed Bath & Beyond, but those offers were declined. The CEO of Bed Bath & Beyond actually had multiple opportunities to sell the company and enact a buyout, but she declined each time. Not only that, but Bed Bath & Beyond never tried to improve their revenues and never tried to derive additional revenue streams. We can see that Bed Bath & Beyond only makes money from a single revenue stream, and their revenues declined significantly between 2019 of $11 billion to 2022 of only $6.6 billion. That's a $4.6 billion drop in revenues over those 4 years, at what point Bed Bath & Beyond never tried to improve those revenues or generate additional revenue streams. Obviously, on the flip side, Adam Aron has created multiple new revenue streams and has even improved existing revenue streams as well with new partnerships. As Adam Aron said, the overall box office is up by about a third compared to 2022 already, and AMC will have and is having a significant recovery. Now, on top of this, Adam Aron has also been actively paying down debt to reduce the company's expenditure. But again, it seems Bed Bath & Beyond was doing the exact opposite. Bed Bath & Beyond was actually taking on additional debt to try and repurchase some shares. So again, it seems like the CEO of Bed Bath & Beyond was actually trying to force Bed Bath & Beyond closer to bankruptcy even faster by taking on additional debt and increasing those expense payments. Not only was she increasing expense payments, but she was also not increasing revenue and was therefore forcefully pushing Bed Bath & Beyond to generate additional losses. And therefore it's very likely the CEO of Bed Bath & Beyond could have actually been bribed similarly to these two brokers to manipulate the stock of Bed Bath & Beyond, or effectively to try and push the company towards bankruptcy to help those shorts win. Now, something else I wanted to talk about is this tweet from Donahue George. He said that Adam Aron plans on selling 400 million additional AMC shares after the reverse split. Now, I seriously don't think that's true. I'm pretty sure it's not Adam Aron's intention to completely dilute AMC and raise as much cash as possible. He said it's a possibility that AMC can raise cash if needed, but he does not plan on doing so. But I think if you're against the reverse split, you also have to realise that Adam Aron can still dilute the company issuing more APE shares, and he can actually issue significantly more APE shares than he can AMC shares. You have to remember that with the AMC preferred equity units, aka those APEs, there's actually an authorised amount over time of up to 5 billion shares. Yes, right now the float of APE is around 1 billion shares or 900 and something million, but Adam Aron actually has the authorisation to sell up to 4 billion more APEs. And therefore I know for a fact that I'd much rather Adam Aron issue one AMC share post-split at $40 per share instead of issuing 40 shares of APEs at say $1 per share. I'd rather Adam Aron not issue an additional 4 billion APE shares at $1 per share, only raising $4 billion total. Adam Aron instead could issue only 100 million AMC shares post-split to raise that same $4 billion. That's 100 million shares issued post-split compared to issuing 4 billion shares pre-split. Again, Adam Aron has no plan or intention in 2022 or 2023 to authorise more shares or to issue any more shares of APE or AMC. But any of these additional APE shares can be issued at any time based on AMC's sole discretion. So again, if you're against the reverse split, you're basically begging Adam Aron to issue 4 billion new APE shares at only $1 per share instead of issuing any AMC shares at a significantly higher price per share. But as I've said previously, I do believe that AMC will soon become profitable and therefore Adam Aron won't need to issue any shares at all. Largely because Adam Aron is improving AMC to make it a profitable company so that it's self-sustaining, unlike Bed Bath & Beyond. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.